Oh man, markets flip-flop yet again. Bitcoin cannot keep it up, giving up its gains yet again. Take a look at this Bitcoin candle earlier when we did our market open live stream during the Asian market and the European market. Bitcoin was going as high as 86.5 into the US Open. Thereafter, we gave up a lot of gains, now sitting down here, as you can see, at levels back at 84,000. What's more important is that we're struggling to get that really important daily candle close. We were in territory earlier today, which if we had closed at those levels, up at 86,000, 86.5, we would have reclaimed our daily EMA ribbon. But jitters continue around the US tariff and trade war, particularly with China. The S&P pretty flat here on the day, including the pre-market slightly down. The Nasdaq pretty flat as well. And that jitters continue through into Bitcoin, which was at one point earlier today up 2%, a nice strong candle, but since has given it up. There's now 4 daily candles here struggling to penetrate through this daily EMA ribbon. I was really hoping today would have been that day, but not quite yet. Now, we do still have 4.5 hours left of this candle. Do I think it'll close above it? Probably not. It's a big ask unless we get some good news or a tweet or something. I don't think we're going to quite get to that, $86,000 Bitcoin close, but it's not possible, right? Not impossible, sorry. It's not far away. I mean, it's 2% move you need here on Bitcoin, 2.5%, sorry, given that we're down 0.5%, in order for us to see those levels again. Now, what does this mean for the wider situation? Well, the wider situation means we need to have a little bit of humility, right? Because the reality is when you look at this chart, on the daily chart that you're looking at right now in front of you, this is in the control of the bears. We are beneath our EMA ribbon. Yes, we're very close to reclaiming it, but up until now, just like here, we're beneath it, and we got shuttered back down. We went again, shuttered back down, went again, back down. Even here, we wicked above our EMA ribbon, thrown back down. So until you reclaim the trend, you cannot take it for granted. You need to respect that the bears own the trend and the bias can be to the downside until we reclaim this. Once we reclaim this and we get a green candle thereafter, known as a confirmation candle, then things get exciting for us to go back to 90 and onwards. But we got this battle here, and this battle is going to be important. Now, just like the other days we've seen in the recent calendar, big wicking candles, right? Big wicking candles designed to create volatility to throw you out of this market. Market makers are loving this market right now. They're grabbing all this liquidity as we spoke about earlier today. I mean, in the last 24 hours, another $180 million going to market makers. And again, a reminder of why you don't want to be in leverage. I'll keep reminding you, if you guys actively want to trade with me, I'll leave link in the descriptions to the platforms I used to trade. Bybit, BitGet are the 2 that I'm particularly using right now. Check those out, links in the description. But stay away from that painful leverage, guys. That's what's going to get you right. Let's listen into Anthony Pompliano, a big Bitcoin bull, Bitcoin maxi, who was speaking to Squawk CNBC early this morning, and let's respond to this.
Welcome back to Squawk Box this morning. I want to take a look at the crypto market right now. Anthony Pompliano is here. He's the founder and CEO of Professional Capital Management. Bitcoin now sitting about $85,000, $86,000 after touching what was the most recent low, when it's about $76,000. Correct. Where are we going here? And how are you thinking about Bitcoin relative to gold in this particular moment?
Yeah, I think that's what everyone's really talking about right now. Bitcoin is down about 10% to start the year. Gold's up 20%. But if you look out over 1 year, they're both up about 35%. So it's pretty interesting that there's been this divergence. But if you go back and you take a look, you can actually see that gold usually leads these rallies. Okay. And nobody really knows why that happens. My kind of guess would be that a lot of the central banks and institutional investors, they're either not approved to buy Bitcoin or they're not used to running to Bitcoin in these moments of kind of geopolitical uncertainty. What we do see, though, is when gold runs about 100 days later or so, Bitcoin not only catches up, it usually runs much harder. And so you get that kind of higher volatility.
How much are you seeing people either buying or selling Bitcoin direct, meaning actual Bitcoin, versus playing the ETF market, and the ETF market effectively buying the Bitcoin or selling the Bitcoin on their behalf?
Yeah, I think you get both now, right? It used to be obviously all retail and all direct in spot market, but I do see a lot of people using these ETFs. And I think what a lot of people kind of missed over maybe the last couple of months is there was a sovereign wealth fund that came out and said, hey, we actually got Bitcoin exposure through the ETF. And the reason why I thought that was interesting is there's a lot of conversation about Bitcoin and the geopolitical kind of debate, if you will. And one of the things is if you are buying Bitcoin and you're actually taking control of that Bitcoin in a self-custody way, you may be doing it for things other than price. You may be worried about the U.S. Treasury market or maybe sanctions or something like that. But if you're buying Bitcoin via the ETFs, you're simply just getting price exposure. You're not actually doing it from a geopolitical strategy standpoint. And so I think there's a lot of countries around the world that are saying to themselves, well, if the United States has a strategic Bitcoin reserve, they're openly talking about the fact that they're going to go buy more, we should have a Bitcoin strategy. Doesn't mean that we have to buy. We could just sit it out. But we need to have a decision here. And buying the ETF allows me to get price exposure, but not actually take on the geopolitical risk of having to talk to you.
Do you think they're going to actually be buying? I mean, that is a big question right now. I mean, yes, we have indicated that we're going to create this reserve, at least initially, with, confiscated Bitcoin and the like. But do you think that there's definitely a sort of all green lights ahead for the taxpayer effectively to be buying Bitcoin? Because that's what we're talking about.
So they're talking about tariff money going for
So I went down to Washington, D.C. last week to the White House. I interviewed Bo Hines, who's the executive director of the President's Advisor Council for Digital Assets. And I explicitly asked him this question. And the thing that he said to me that I think kind of took away was not only are they going to have the Bitcoin Strategic Reserve, which we have, they are going to buy as much Bitcoin as they possibly can.
Good,
with
bullish.
what money? And does that have to be authorized by Congress?
So there's a bunch of different ways they could do it. I think what they're trying to figure out is what is the best way to do it. And so a couple of examples would be they could revalue the gold, they could sell some of that, they can then go and they could buy Bitcoin.
Does that have to be done with Congress's approval?
There's a debate around who would be responsible, who would be involved. And they have
all this has to be done with executive order? I mean,
well, they have an interagency group right now that's working together. And so at that table is everyone from energy policymakers to law enforcement to economic advisors. Kind of everyone is trying to figure this out. I don't think you're going to see kind of very rash decision making kind of unilaterally, but I do think that working group is trying to figure it out. But you also have things like the tariff revenue or other areas where we may be saving money that we previously were wasting or abusing. And so I think that is probably, to me, the thing that the market most misunderstands is it's not just, hey, we're going to hold the Bitcoin. They're going to actively try to buy Bitcoin. And there's other countries around the world, they may be acquiring Bitcoin by mining and using natural resources that they have there. And so I think there's a lot of strategies here that the U.S. is going to pursue.
And maybe I'm just, this part I am skeptical about, given the question mark about how much money we actually will raise as a function of tariffs, because if we, look, arguably, if we can get down to 0-0, there will be no tariffs. That would be a pretty good outcome too.
Yeah.
So I don't know where that's going to shake out. If you want to lower taxes on tips and everything else, you're going to need to offset that with something else. Effectively, you're buying Bitcoin, you're leveraging up the taxpayer. Like that, you're basically going to have to sell treasuries to buy Bitcoin. So you could. That's like what Michael Saylor does. It's just in a different format. And the question is whether the American public is game for that. I think that's a very sort of fundamental question.
Well, I think that gold has served this purpose for a very long time. Obviously, the United States has done very well holding on to that gold. And what people are really starting to wrap their heads around is that Bitcoin is digital gold. And so as we head into this world, you need things that are sound money, right? That's ultimately what you're trying to do here. And gold is an analog version of sound money. It's outside of the legacy financial system.
And no one can believe that, if you don't, in this case, if you don't believe it, then it could be a huge mistake.
And listen, I think that every decision they make financially could be a mistake, right? Holding gold could be a mistake in the future. Right. So you have to take some degree of risk.
Holding fiat, holding bonds, holding, long duration bond, all those things could be bigger mistakes than Bitcoin.
I think that the big shift that's happened, obviously, many people that watch this show probably grew up in a 60-40 portfolio world. A lot of the younger people are saying that 60-40 portfolio no longer works for me. And so things like Bitcoin are entering into that conversation. And as these young people ascend to positions of power and influence, I think they'll have a big hand in making these decisions.
Anthony Pompliano, it's great to see you, sir.
Good session there with Anthony Pompliano. I think that's very insightful, and he always speaks really well about Bitcoin and the path for Bitcoin. Ultimately, he's right. The strong thing here for Bitcoin that you have to understand is outside of it not being fiat currency, its superpower is that it's agnostic, right? It takes no sides. In a world which we're in today, post the Trump tariffs and living in this tariff world, you've got a lot of countries pipping against each other, right? Or having a Cold War in essence and arguing and having a trade war and the rest of it. And Bitcoin acts as that neutral, real, hard, sound money. And I think that's the biggest superpower of Bitcoin right now, is it doesn't need to take sides, right? It can just play its own position. Whether you're Russian, you can buy Bitcoin. Whether you're Ukrainian, you can buy Bitcoin. Whether you're in the Middle East, you can buy Bitcoin. Whether you're China, you can buy Bitcoin. Whether the United States, you can buy Bitcoin. I think that's the real superpower that crypto poses, outside of course, it being immutable. Nobody can take it off you. It's the single hardest asset we have. People are waking up to it, and that's really, really important. Now, I do want to switch back over to the chart just to remind you, we spoke about the struggles we're having to fight this daily candle today, but that doesn't take away from the fact that I do want to say that we're still breaking trend, right? Just like I shared with you a couple of days ago, we are breaking out from a trend that started at the start of this year, post the inauguration, and we're breaking it for the first time. And this is really, really important. So I'm not changing my mind that suddenly, we're not breaking out this trend. We are. It's just that with the daily EMA ribbon, we can see that the bear's still putting up its final battle. If they fail this battle and the bulls can win, this breakout's really popping off, and it's a super bullish setup. Now, just take a look at the chat. Who have we got in the chat? Pity, how are we doing? Just hopped in. Well, doing as we normally do over this last kind of week or so, which is do okay during the Asia UK Open, and then the US market just makes us kind of bleed those gains away. Dear Spence, this market is frustrating for so many reasons. Bitcoin strength looks really good compared to what it typically does. Off of stock weakness though. Pity Huff, I'm getting so frustrated. I'm thinking of deploying the rest of my stables and calling it a day. Bitcoin, Sonic, ADA, and sit back. Look, you got to understand the market is exactly that. It's a dynamic of transferring wealth from the impatient to the patient, right? So that the fact that it's testing your frustration and your patience, you're not the only one. There are many people that have already exited the crypto space because they're frustrated, because they're bored, because they're prodding this thing and saying, Bitcoin, do something. And the reality is, when you look at it, like I shared in kind of this morning's live stream, you're sitting here in an asset class which is at 84,000, was touching 86 earlier today, and we've been at 110, just months ago, or just in January, right? And so you're looking at an asset class that, despite a monetary tightening cycle, despite money not being in the system right now, has hit another all-time high, right? And is just on its pullback leg. It's super bullish. And I think that's why we just need to remind ourselves to be patient. I know where the majority of the frustration is coming from. It's not actually from Bitcoin, it's altcoins, right? And I feel that. Whether it's Ethereum, it's causing a lot of frustration in the market. A lot of people hold Ethereum, myself included, and it's normally a decent chunk of the portfolio. So you feel that when Ethereum is sitting at prices from October 2023. Of course you're going to feel that. It's the altcoins that are really upsetting people right now. Bitcoin is very strong, right? And I think what the market needs is, of course, an altcoin season. The problem is, until risk rotates on, which is the exact opposite of what's going on right now, dollar index is really struggling here on the weekly chart. If you look at the dollar index, where we're at suppressed levels, now retesting some of the support, unless dollar index, can start to show some strength, right? We're not going to see that kind of environment that we want. Now, I know this is a little bit counterintuitive, yeah, because we need dollar index to go down typically for Bitcoin to do well. But what I'm saying here is this is currently falling because people don't trust the dollar. We need that to unwind. And then we need the dollar index to go down because risk is rotating on, if that makes sense. A little bit nuanced, a little bit complicated. But that's what we need to see happen. Let's catch up on OM as well. We covered that this morning, having a 35% up day today, but still horrific couple of days for OM and the OM community. $6 billion wiped out in an hour or so. Apart from that, guys, just red everywhere, right? Let's get a refresh of the bubbles. It's just pain. It's pain everywhere. These candlesticks are not fun whatsoever. All right, let's check into the suits, see what they're saying over here.
Minutes ago, 50-30-20 was, maybe the new breakdown. And maybe this was the most stark reminder of what could happen with 60-40 when you have upset in the equity market and in the bond market at the same time. Let me ask you about private credit. $1.5 trillion asset class, and fast growing, obviously. Yep. I read, earlier as I was preparing for this, that some are suggesting that this moment could be the first very big test for private credit since it really started exploding as an asset class, just given where we are, the uncertainty around the economy and what a downturn could mean for private credit assets. What do you think?
Look, I think there's a lot of conversation.
Let's hold fire on that. I do want you to listen in on this for a second. Let's see if we can tune into this. 1 second. Let's pull that up. Let's get you guys seeing this. Listen to this.
Armstrong last night ahead of this summit today, and he's one of the members who's been advising the Trump transition team since the campaign trail, and he made the point that he thinks a lot of countries are going to follow. I know of already Middle Eastern countries, Gulf states that have been looking into a Bitcoin buying strategy. There's also reportedly conversations within the Chinese government to look to follow suit if the government and the U.S. makes this move to roll out a purchase plan.
But there is no purchase plan.
Yeah, exactly. Well, I mean, if you have a strategic Bitcoin reserve, China used to be one of the epicenters for Bitcoin mining. It's very easy for them. They have all of this hydropower, and so they already have all the facilities, and they banned it a couple years ago, but it takes nothing to turn it back on. And then, I mean, similar to Iran evading sanctions by just mining Bitcoin, they already have it on hand.
And that's exactly the point. Just imagine a world where China steps back into the market. And what better way to screw the US in this trade war than for China to go and control the Bitcoin space? So understand that Bitcoin becomes a very important geopolitical asset which countries will, fight for, will lobby to take control of, right? So we need to be very cognizant of that and understand that, there's a lot of factors at play. And crypto is an asset, just like a piece of land might be that a country will fight for because it has strategic purposes. Bitcoin serves a strategic purpose as well, and countries will, now that they can't destroy it, which they've tried for many, years, will try to adopt it, will try to control it, will try to have a big say in it by building a strategic reserve, right? We're going to start to see that unfold, and when that does, the kind of price targets you expect, we can start eclipsing our little basic price targets, because when that serious money comes in, when countries are looking to build strategic reserves, that's the kind of thing that brings some serious dollars into the crypto space.
Do you know the point?
Well, the point's clear. I think that just to rewind the clock, sports were not an asset class, or sports media and entertainment were not an asset class that were accessible broadly, especially sports. I mean, it was really the last few years where a few firms pioneered with the leagues to open up for institutional capital to even take out some of the owners or diversify their holdings. It's an uncorrelated asset. It has a great compounding return effect that's proven. And in markets like this, it feels pretty good to own a few sports assets.
Yeah, it does.
Also, it's a rare asset. I mean, how many sports teams are there out there?
Sure. Well, that's the scarcity value, obviously, that has certainly played a huge role in why valuations continue to go up and to the right. Thanks for being here. It's a good checkup on alternatives, and we'll see you at your conference in the fall.
Thanks, Scott. Take care.
That's Matt Brown. Case. All right, up next, we're tracking the biggest movers as we head into the close. Back to Christina, who is standing by for that.
Okay, so we are now just shy of 13 minutes until the market close. And to be honest, I'm looking forward to the market closing because, like I said, over the last few weeks or so, the market has not given Bitcoin any impetus or momentum. Bitcoin tends to do better in the Asian and European time zones and market opens. So I'll be happy for this US market to open in the close in the next 13 minutes, and then we can focus on what else is going on. Now, again, of course, markets are still tentative around where this tariff stuff is going to head. They're also trying to digest a bunch of company earnings as well. You've also got CEO Zuckerberg giving testimony at the same time. Lots going on, right? Lots going on. Lots of people trying to talk about, like you just saw there on CNBC, what is the ideal portfolio mix in this type of economy? It's a tricky economy to read, right? And you're not seeing normal movements occur that you typically would see. I mean, for one, you're seeing the dollar index fall. You're seeing a weakening in the trust in US. You're seeing the US 10-year yield quite high still, although it fell 1% today. And that's the kind of market where it just gets investors a little bit antsy. I think that's the best word to describe it. I mean, if we jump on over to the VIX, let me just show you how the VIX is. So the VIX, again, today, if we go back to the hourly chart, when the US opens, it spikes, right? It kind of goes up and then kind of cools down thereafter. So we're seeing a little bit still remnants of volatility in the VIX, but nothing like we saw, earlier in the month. You can see here, April the 7th, the WIX went as high as 60, at far more sensible levels around my red line of this kind of 30 level, which we've seen in the past and is far more normal. So, we're definitely on the better side of the volatility. We're definitely more on the bullish side where things can start to look upwards compared to what we've just been through over the last kind of week and a half. But we're not completely out of the woods is the way I'd characterize it. And I think the fear and greed index tells you the same. This was as low as 18 and lower than that last week. Now sitting at 38, still fear, right? Which is the point. You're still not in this kind of neutral or green or greedy territory. It's still fear, but not the fear, extreme fear that we saw just last week. So we're moving in the right direction, but we cannot rest on our laurels because more work needs to be done. Could you explain the bonds and the 10-year relationship like I'm 5? Why are markets watching closely? Yeah, I'll try to weigh that in. So first and foremost, we have to understand what is the 10-year yield. The 10-year yield is what is being paid to you for buying a US bond. It's a coupon, right? For you lending money to the US government for 10 years, you will get 4.3% in your coupon. That's the yield. Now, what does this represent? This represents how much you trust the US government, right? Now, the lower this price, the more trustworthy and safe the US government seems. Why should they pay you a higher yield? If you start to lose trust in the US government, you're going to demand a higher yield to lend the money, right? You'd want a highest interest rate if you're lending to someone who's less solvent, who's less capable, right? And that's why if you compare other government bonds, they'll be higher than 4% for 10 years, right? They'll be higher than the US rate. So the US is considered the risk-free, safest place, right? Or sometimes they'll refer it to as the reserve currency for this exact reason, because the US government doesn't default. They always pay back their bondholders the yield that they promise, right? So it's considered the risk-free rate. If you did nothing but buy a US 10-year government bond, you're getting 4%. Therefore, if you're playing around in stocks, if you're playing in crypto, you sure as hell better be getting better than 4%, right? And markets have to focus on this because this is the single most important number. Trump was watching this number when he was doing it, and that was the reason he flip-flopped ultimately. Because if this number goes up, it means the bond price goes down, right? They're inversely correlated, which means people aren't interested in your bonds. If they're not interested in your bonds, they're not lending you money. If they're not lending you money, you start losing your status as the reserve currency, or in this case, people start losing trust in the US government. Not a good look. Hopefully that makes sense. Let's jump on over to the suits to see what they're saying to do with Bank of America, I believe. Let's just refresh that first. Bear with me a second whilst I pull that up for you guys. Okay, got that up for you guys.
You have the S&P 500 not doing a whole lot of anything, although it's notable that it's in a death cross pattern with the short-term trading average, the 50-day moving average, falling below the 200-day moving average for those who want to go by technicals.
Yeah, we closed at that death cross, if you will, yesterday, and a lot of people pointed out, and I think it was like the first time since 2022 or whatever, but a lot of people pointed out that, okay, look, historically, that typically is a sign that that correction we were in could re-intensify and turn into an actual real bear market. But we'll see. We talk about the market moves today, and we should point out once again here, volume is incredibly light here as a lot of people are away from the desk. But Scarlett and I are here, and so too is our next guest, Emily Rowland, never taken a day off, co-chief investment strategist.
That's really interesting. They just reminded me that to check the death cross on Bitcoin, and we're forming a death cross as well, right? Which is not a good look. So again, it's important to take these with a pinch of salt because, you know, death crosses don't always play out. I mean, look at this situation here, right? They're about to cross, they kind of ride next to each other, and then from that point, Bitcoin went from 27,000 all the way up to 73,000. But death cross, just so you guys know, is the 200 exponential moving average along with the 50 exponential moving average. In fact, you can even use the basic. Let's use the basic averages instead. Actually, let me show it to you here, and then let's see if the basic one is crossing as well. So if the shorter time frame is crossing down, this white one is crossing down below the longer term average, which is this pinky color here, this kind of, I don't know, magenta color here, then this is a bearish sign, right? This will be a bearish sign. But again, look how close we were here to crossing, and we bounced and went to 110 on Bitcoin. So take it with a pinch of salt. But statistically, I think it works out. I can't remember what the percent is actually, but there's a percentage of the time that this breaks to the downside. So be cognizant of this. Let's also look at the simple moving averages, which is not exponential, right? 50, and let's apply the 200. And again, it's death crossed, right? It's already death crossed. So you got the yellow line crossing through this on the daily chart through the longer term white line. So this is a bearish signal, guys. Okay, so this could be your argument for why we could have more of a pullback to the downside. But again, there's no reason why Bitcoin can't break trend and just kind of turn itself back in that direction. That is what we're hoping for. Again, this market, more so than technicals, we'll look at the technicals like we always do, relies on what's going on in the market, right? Are you telling me if that's a gold, if that's a death cross and falling to the downside, but Trump makes huge progress on the tariffs and puts zero tariffs on China, you think we're not going to the moon? Of course we're going to the moon, right? And if we don't get rate cuts, do you think we're not going to the moon? Of course we are. So you got to take that with a pinch of salt that, you know, just because that TA is playing out doesn't necessarily mean we're going to the downside, but it does show that the trend is strongly and firmly in control of the bears, particularly on the daily time frame. But again, I already shared that with you, right? Until we get above the CMA ribbon and start really working our way to these higher levels, we won't reclaim that trend on the daily time frame. On the weekly time frame, we still own the trend. Bull still own the trend, right? We've not lost our weekly EMA ribbon yet, so we still own this trend. Let's also put out the Bollinger Band as well, so you guys can see that we're bouncing from the bottom of the Bollinger Band, and your next natural location is the middle of the Bollinger Band, which sits at 92.5k, which is why I'm confident that even if we're not strong to go create new all-time highs, I'm still confident we'll get back to that 90k levels, given, you know, assuming we don't get any crazy bad news in this market. Okay, so that's my current view.
A rundown of key earnings we are watching in OT. The market zone is next.
They keep going to break. They're not doing any work.
People are saying that it's horrible. I mean, you've seen it in the Conference Board's Consumer Expectation Index is at a 10-year low. University of Michigan Sentiment Index rolled over. And we're now, finally, I don't want to say finally because it's not great, starting to see it in Europe as well with things like the Zoo survey and the Centix Index starting to roll over. There might be an element here, though, where businesses and consumers are saying one thing and doing another. And I think that really speaks to the divergence between.
I do want you guys to listen to this, which is Senator Loomis, who of course is very pro-crypto, speaking to CoinDesk, where she says that Bitcoin will get to 200 trillion market cap, which is 9.5 million per Bitcoin. Let's have a listen.
What's going on in this industry in just a second. But our last Spotlight episode featured Michael Saylor, and he really kind of unpacked his plan towards this $200 trillion Bitcoin network. You mentioned him as one of the people you speak to about what's going on in this industry. You listen to what he has to say. Do you think that Bitcoin can be a $200 trillion network?
I do. When you look at the fact that it is fully decentralized, that it is immutable, that it is scarce, that as more of it is mined, the volatility is going to decline. Its use cases will expand. All of these events surrounding it as it matures as an asset are going to make it more useful. It is faster. It is cheaper. The Lightning Network that now can lay on top of it makes it more useful as a means of exchange. Its continued growth as a store of value is going to be, I think, its strongest future use. When you look at the US dollar, that because of inflation is declining in value every year much more quickly than we'd like to see, its use case as a store of value is not good. Its use case as a means of exchange is very strong, always will be. But if I was going to save, I'd want to save in Bitcoin, not in US dollars. So I think we're seeing more and more people realize that because it's immutable, because it's easy to store and retain either in an individual wallet or through a custodian, it's easy to buy now because of the exchange traded funds that have been created by very blue chip companies that people are used to using for all kinds of investments. It's become more available and user-friendly for people who are more used to traditional assets. And I think all these things, when you add them together, have expanded the use case for Bitcoin.
Well said, Senator Loomis, a boomer who finally gets it. She understands. And I think the most important thing for me to take away from that was the typical person who's really pro-US dollar or fiat currency says, no, Bitcoin is not going to be the one. You can't spend it. You can't go buy coffee and wait for the transaction to settle on the blockchain. And no. You're missing the point. Right? Use your fiat currency for transacting. It's great for transacting. It's not a great store of wealth. I do not want to keep my life savings in dollars. And fundamentally, the new generation, the new wave of people who understand crypto, doesn't matter your age, the new wave of people who understand crypto are those that understand I don't want to be in dollars. Right? I will use dollars, no problem. Dollar's not going to go away. Crypto is not here to destroy the dollar. It's just to be there as a store of wealth. And those who understand it are those who are adopting crypto. And she spoke about immutability. Think about it. What did the US population just vote for in voting for Trump? And the fact that Elon Musk, with the whole Doge and going through all the expenses, they voted for transparency. And what gives you transparency of money? Bitcoin. Would all this stuff and all this, all this money going around and being misspent in the economy, do you think this would happen if money was used in Bitcoin? If the government's money, the tax revenues, was put into Bitcoin and given to the various departments to use on the ledger so you can see it and transact every single transaction? Do you think this kind of wasted and squandering of money that Elon Musk has exposed through Doge would happen under crypto? It wouldn't, right? The people are voting for transparency, and Bitcoin is the vehicle to deliver that transparency.
The market. So what's good today? Smallest intraday swings we've seen since all this craziness started on April 3rd. We had better earnings out of the bank group. That's a good sign. The VIX is below 30 again.
It is.
That's good.
Yeah.
First time since April 3rd. Yields have been down. The dollar's up a little bit. All this is a good sign here. Look at the VIX there, below 30 there. That's a good sign here. The volumes today, Scott, dramatically lower. I mean, 50% below what it was just a few days ago, even for some of the big ETFs like the S&P 500 ETFs. You had the best interview of the day, Dubravko Lakos at JP Morgan, and there's a man I greatly respect who basically threw his hands up and said, don't even ask me what earnings are going to be like in 2025. You saw he came on with you telling.
All right, guys, there you have it. Markets are closed in the red. Dow Jones ended the day down 0.4. S&P relatively flat. NASDAQ perfectly flat. Russell perfectly flat as well. The volatility index, known as the VIX, down to 30, down 2.7%, which is good. The dollar, the US 10-year, also taking a notch down to 4.3, which will be a good news for Trump and in seeing things calm down on the US 10-year side. Bitcoin into the US close is down 0.7 after being as high up as 86.5 earlier in the day. So that's a look and the roundup here of the US markets. Hopefully Bitcoin can show some strength now that the markets are closed in the US. Maybe we can have a couple of positive hourly candles, maybe bounce from this Bollinger Band and kind of try get our way back to 85 as we lose 84K at the time of speaking now. Looks a bit like we're just giving. Look at this. Look at the hourly candles here on Bitcoin. I mean, ever since the US market opened, 1, 2, 3, 4, 5, 6, 7th red candle in a row. When look at this. Look at this through the night, through the Asian period and then European period here. I mean, it's just grow it, give it up, and then give up a little bit more than you actually grew. So that's been the tale of the kind of patterns we've been seeing over the last few days here. So maybe we can see another leg up as the US markets close and they go to sleep and can't scare us with another tweet about the US and China trade situation. That seems to be on people's mind. Let's listen in again to Pompliano, who's a Bitcoin maxi. He went to the White House to speak to the head of their project around the crypto. Let's listen to what he had to say.
I went to the White House last week to interview Bo Hines. He's the executive director of the Presidential Council of Advisors on Digital Assets. Bo's responsible for shaping our national policy on Bitcoin, stablecoins, and crypto assets. I took away 10 major things from my conversation with Bo.
Just 10?
First, crypto's become a bipartisan effort. There's Republicans and Democrats who all understand the importance of the technology, and they see the industry as politically important now. The second thing is that people from every major government agency are involved in shaping our national crypto policy. The industry touches everything, from economics to geopolitics, from energy to law enforcement. We're better off having a well-rounded perspective in the room, in my opinion. The third thing is that the administration understands that Bitcoin is unique. They see the digital currency as digital gold, and they believe it to be strategically important for the United States. There's a large appetite within leadership to acquire as much Bitcoin as possible. That's good news for Bitcoiners. And I now believe a good framework to use is the question, what would happen if Bitcoiners infiltrated the White House? Because that's basically what seems to have happened here. Now, stablecoins is the fourth thing. Stablecoins are a big focus at the moment. The administration understands that these digital dollars, they're driving global adoption of US dollars. And ultimately, that is good for the US in the long run. Fifth, Bo Hines and the administration see Bitcoin and a strong dollar coexisting in the future.
We just spoke
They
about
believe
that.
Bitcoin's good for the dollar, and they believe that a strong dollar is good for Bitcoin.
Good.
I agree with them. Sixth, large players from big financial institutions to foreign governments, they're all interested in figuring out what is their strategy for Bitcoin and crypto. The White House is fielding tons of calls right now from all of these groups. Seventh, recent changes at various regulatory organizations, that signals a tailwind for the crypto industry. The SEC, the CFTC, the OCC, and other regulators, they're all changing their tune. This can be seen in the recent personnel changes and some of the early rule changes that have happened as well. Now, eighth, the administration knows they got to rebuild trust with the industry and with the American people. It's really difficult to measure that change, but they want to work with industry players rather than work against them. Ninth, we should expect to see Wall Street and legacy financial firms embrace blockchain technology more broadly. Things like tokenization is all on the table right now. And 10th, there's a persistent optimism in the administration about technology in general. Bitcoin and crypto are a key part of this strategy from what I saw. Now, overall, not only was I impressed with Bo Hines personally, but I also found the administration's approach refreshing. I did not expect to hear comments like Bitcoin is unique, or other comments like we want to acquire as much as we can. With all that said though, talk is cheap. The administration followed through on an important campaign promise by establishing that strategic Bitcoin reserve. But it would be disappointing if they stopped there. The tens of millions of Americans who own these assets, they're looking for material improvement in the United States' position. They want to see our government embrace Bitcoin and embrace crypto. And hopefully, that's exactly what we're going to get.
Nice pump. Thanks for sharing that. Look, really insightful, right? And I think this is really important to understand is like the asset class you're looking at right now in terms of Bitcoin is not the same asset class as we saw just last year, right? In fact, just towards the end of last year, before Trump was in power, this is not the same thing. You just heard from Senator Lummis, who I just shared her insights. You're going to have, Jerome Powell gone and have a new head of the Fed. Gary Gensler's gone, new head of the SEC. You've got these kind of people like Bo Hines in place. You've got people who understand crypto and are pro-crypto, and that's really, really powerful. And not to mention, of course, like he said there, the huge institutions like BlackRock, JP Morgan, Fidelity, ARK, all of these guys backing crypto to the hilt. I mean, this is a hugely adopted asset class now, and it's just set up for a really, really powerful move. So certainly something I want to remain invested in, along with altcoins in the portfolio for more upside as well. Because the reality is, will the returns of Bitcoin be as high as they were in previous cycles? No, right? With the big guys comes more stability, becomes more holding power, but also it takes time. The returns will be far less. You're getting more adoption on Bitcoin. This is a multi-trillion-dollar asset class. It's not just going to move like it did when Bitcoin was at $1,000, right? It's a different space, but you want to therefore understand that the return levels will be different as well. So there you have it, guys. There's a way in on the market close. Bitcoin unable to deliver a green candle despite having a really promising start to the day. But the beauty is Bitcoin is 24 hours, so we'll continue trading whilst the US goes to sleep, and hopefully with nobody tweeting any horrible things about trade wars and tariffs, we can try to go get that 86,000 back. We're now sitting at 84. 86 is going to be key. Get that daily EMA ribbon back, continue that break of trend on the daily chart, and we can start working to higher levels. Again, I know people are worried about altcoins and when are their altcoins going to pump. Now's not the time. We're in a period of uncertainty. Sorry to break it to you, your altcoin bag is not going to pump. You've got two decisions, hold or sell. And in fact, a third one is accumulate if you want to buy some more and add to your position. That's it. Hopefully you enjoyed this live stream, guys. If you like this type of content, smash all the likes. Don't forget to subscribe. Make sure you're followed on Kick as well. If you actively want to trade with me, link is in descriptions to the platforms I use. Make sure you hit those up, get your bonuses, and I'll see you in the next one.